As Chinese leader Xi Jinping refuses to negotiate with the U.S., he visited ASEAN member countries this week to reinforce China's trade ties. Experts say breakthroughs are unlikely as its partnership has brought about debt problems for Cambodia, huge trade deficits, and slowdown in economic growth. BNP reported that Malaysia is more vulnerable to a slowdown in China due to its open economy. Malaysia's economy contracted 1.1% in the fourth quarter after rising 1.9% in the third quarter of 2024, and its economy is expected to slow down in 2025. Malaysia is China's eighth largest trading partner in ASEAN and the only ASEAN member with a trade surplus of $9.1 billion. It could be pushed to absorb more Chinese goods as Beijing looks to replace the U.S. market, which will further burden its economy. Cambodia has fallen into a debt trap after the completion of the $5.9 billion China Laos Railway in 2021 financed by China. Its massive debts led to the loss of half of its currency value, a double-digit inflation, and slower growth compared with pre-COVID levels. Cambodia has a trade deficit with China of $9.3 billion and a trade surplus of $12.3 billion with the US. To avoid the 49% tariffs, it would have to import more US goods and minimize taking in more Chinese goods given its massive debt. Vietnam has a trade deficit with China of $49 billion and a trade surplus of $124 billion with US. Vietnam was among the first nations to reach out to the Trump administration and appears keen to take in more US goods than Chinese goods given the limitation in exports to China.